Had a lot go down in the crypto space since our last update in Ethereum Classic. Hopefully you guys caught my numerous updates on various other coins, especially the state of the cryptos updates, which I try to publish every week or so, or anytime there's a major inflection point or development. So if I don't cover your specific coin, check those out. Those are in the playlist. Again, state of the cryptos, look for the thumbnail with all the little crypto icons on it. But this is an update on Ethereum Classic, and all these charts will be available in the description below. So look for links there. We had a pretty nice upstart rally going on, although we've had a very sharp pullback. Ethereum Classic doesn't look too bad, but some coins are not looking as good. As a matter of fact, we have Bitcoin Cash making a lower low today, and it seems to be the only major coin I'm tracking that has done such. Possibly, no, not Doge. So that's the only one that I know off the top of my head that has done that. None of the other coins are looking particularly, well, as bearish, although we weren't that surprised because Bitcoin Cash didn't have anything bullish at the time. So we'll do an update on that in the near future. But Ethereum Classic still has its 1-2 setup in place. How did we get to this point? Well, let's go back into the history a little bit. So we had our big crash. We had our initial bottom on May 12th, and it looked like we had a rally developing that could have been interpreted as 5 up. But as you all know, that setup collapsed and we got that nominally lower low. And wasn't too surprising. We had this as an alternate count the whole way. 1555 was the original bottom. And then we had a secondary bottom on June 18th of about 1250. And well, we extended a little bit lower than I would have expected for a fifth wave. But other than that, our proportions were pretty impulsive looking. So this looks complete. And since then, I'm going to zoom up a little bit. We've had an upside rally that was looking pretty bullish up until very recently. So when we take a closer look at this rally, we got a 1, 2, 3, 4, 5. The internal Fibonacci proportions looked correct. So we were looking for the third wave to ensue. And well, we haven't quite gotten that. I know these are a little misplaced. I'm going to move these over to make it more realistic looking. But we were expecting to have an explosive rally take us at least to $21. That would have been the third wave. And well, this was convincingly the first of a third wave, but then we've pulled back so sharply that it's looking less and less like that's the case. So there is a small chance that this is actually a 4 and a 5, although this still could be a 1-2, 1-2 setup. So I don't think I have that there. Here we go. So this would have been here. So basically, I'm going to draw that on here so you guys know what I'm talking about. Where are my counts here? Here we go. So this is what we could be interpreting this as. Third would go there, fourth and a fifth up there. I'm going to move these over to make more sense of the timing and make this green to match the other colors. So this could still be counted as a first wave until we break the support at $15.04. We can still interpret it as that. If it does break below that, this could just be a big fake out ABC rally, although the proportions are a little off. So I'm suspicious that that is the case. The other interpretation is that this is actually an A over here, B and a C. And since that interpretation is there, I didn't draw it, but I'll put that here as an alternate. So this is a B and a C wave fake out. I'm going to make this red so that you guys can distinguish that this is actually an alternate pattern, the bearish alternative. So that could take us lower. So basically, in summary, that was a lot of jabbering. We need to get through this pivot zone that we call it in Elliott wave theory. So that is between the 0.618 and the 0.764 extensions. And we did pierce it briefly, but we didn't break all the way through. If we can get through that, that gives us a very good confident setup that this is indeed a third wave up. So we need to turn around really fast because this isn't looking too great at the moment. Now that is the short-term picture. We're going to shift over to the big picture where I've decluttered this and reorganized it a little bit. I went over my new interpretation for not just cryptos, but a lot of different asset classes in which we have major inflection points aligning in the stock market, in cryptos, commodities, and even bonds, things like similar asset classes. Here we have now our purple, which is primary. I know I changed the colors. I think I had an aqua blue color that I was using as the new primary last time. And our lower low would be the orange alternative. So I'm going to get that out of the way real quick first. So our orange alternate sees us going down a little bit lower. It's actually wouldn't be a third wave top, and this wouldn't be a second wave top. This could probably be, leave that off for now, a lower low. So I can't rule that out. Remember, we only pinched we poked the top of our pullback box. So we have room to go lower. without invalidating anything. We could go as low as 745. So that remains. That is what it says in the caption. So with that out of the way, my primary pattern is as follows. I did hint at this before, but that we have one final impulsive rally to go to get to our target. So why do I see this as one more impulse? When we look at the history, you'll notice that our top in January 2018 has been marked as a major wave 3. And that is because for Bitcoin, Ethereum, and Dash, that actually was our third wave top. Those 3 coins go back further than does Ethereum Classic. So they have more history. And therefore, their first and second waves were somewhere before 2015. Ethereum is the same story. If I can get that straight, there we go. So we got our 1-2 back here, and Dash also has that same thing going on. It's also one of the older cryptos. And this top here coincided for pretty much everything, including the stock market, in which it was also a third wave top. So that's right. Early 2018, about January or February 2018, was a clear third wave top, major third wave for the S&P, the Dow, the Russell 2000, all of those. And therefore, it makes the most sense for Ethereum Classic and the altcoins to be counted in that same way. Many of you will also mention that the big coins can sometimes suck down altcoins. I don't know if I totally buy that logic, but this would be a very good explanation for why that would happen from an Elliott waves perspective. I'm distracted right now. My neighbor is messing with the tree over there, fixing the landscape. A little weird because it's an apartment complex. So what we have here is our third wave top and our fourth wave bottom, major fourth. And you can interpret this as the fourth wave bottom or that as the fourth wave bottom. We could say that this is actually an A and a B and a C. That is a potential interpretation. But I'm just leaving this here because I think we had a slightly lower low here. Doesn't really make much difference in the overall analysis. That would make this entire blow off an A wave. And then we have a pullback, which we're counting as the B wave. And that would explain why this looks like a 3-wave correction, A, B, and a C into the box. We may or may not be done. Our MACD divergence is looking decent so far. It's not really, hasn't really stretched out anymore since that initial bottom on May 14th, May 12th, whenever that was. And if this is an A and a B, we have one C wave rally left. Why am I counting ABCs? Well, I'm interpreting this entire thing as a diagonal, and the diagonal has 5 waves, each of each subwave also contains 3 waves. So we don't subdivide this into impulses. Each subwave will be an ABC pattern. So here you could count this again as an A, B, and a C, A, B, C, or 4 and then an A, B, C from there. However you count it, this doesn't really count that well as a standard impulse. When we look at the internal Fibonacci's for this blow off, same thing here. We only got to about the 1.0 extension for what we'll be calling our third wave, and there's no discernible fourth wave. So this looks like a corrective bounce. We've had a corrective pullback, and therefore we have one final 5-wave impulse to take us to our target. And I've actually mocked this together. This is based on a 38% retrace. I basically recreated what we had here. We had a 30% retrace here, and we blew off to the 1.764 extension almost. Here, I expect similar, because that is a standard impulse top, even though this wasn't an impulse. So based on that, I expect to get to about $70, $71 for the bigger first wave impulse. That should happen relatively soon. I know it's hard to believe because we had a 7% down day right now, but if this is actually just a second wave, we would expect a tear that way. Not only that, we've seen crazier things happen, so it's not unexpected. And if any coin's going to do that, it's Ethereum Classic. It's probably the most explosive coin that I follow. After that, we should expect again, a 38.2% retrace, maybe to the mid $30 range for the second wave. And then we should be off to the races. Could take us to $400 to $600+ for the third wave alone. And our final blow off top has lots of confluence in the upper $700 range. Although we do have fibs that could extend higher than that. Again, there's a lot of confluence. That 1034 number still sits there right between our ideal extension targets, 1.764 and the 2.0 extension. And we even have some clues on timing because this is a diagonal. That's how I'm interpreting it. When we look at our channel trend lines, our ideal targets are looking somewhere between probably mid 2023 to end of 2023. If I zoom out a bit, you might be able to see the actual timing estimate. That's showing early 2024, but putting in the weekly view does throw off our proportions a little bit, distorts it. So again, we have intersections between our extensions and the trend lines, giving us that. We also have similar time frames for the overall top for a lot of different asset classes, including the Dow and energy, etc. What happens after that? Well, this is a major top that completes a long cycle that goes back almost a decade. this could be a very bloody bear market coming in the near future. So that is something you can worry about later. Right now, let's look at what's right in front of us, which is, well, we need to see more of an impulsive development. Expect, again, a 5-wave rally into this box, should get to $70+. And until we get that, there's no confirmation that we have a bottom yet. So I'm going to have plenty more updates coming your way. Subscribe so that you don't miss those. And until next time, thank you for watching and happy trading.